Hi everybody, I'm just gonna go through the trade for the week for Chipotle and Apple for the week of 1/18/2021, which is the MLK weekend. We can make a quick $2,000 on this if we do this right. Hope you enjoy this video. Have a great day. All right, everybody. I'm in my screen right now, so I am going to trade Chipotle. Chipotle trades at $1,405.74. Actually, the estimates from some of the analysts actually have a projection of 1,600 in the near future in anticipation of COVID. Us getting out of COVID. So I'm going to do a credit spread on Chipotle for this week, the week of 1/18/2021, ending in the 22nd of January. And then I'm going to also make a credit spread on Apple, but I'm going to extend that for a couple weeks, ending 1/29/2021. Okay, so as you can see here, and if you want to understand how to screen these things, you can look at my other videos to understand how to screen it. We've talked about this in previous videos. Okay, so as you can see in my screen here, here's Chipotle's stock right here at 1405, 1406 level, right? If you look down here, this is the RSI, this is the resistance, and this is looking at about 48. So that's good. You want something lower than 40, but this is good. You do not want something high in the 70s, because that means that the stock is most likely going to go down. All right. The ATR is also going down too, so it's due for a bullish comeback. All right. So the next thing we're going to look for is trading activity in the last month. So right now, my screen right here is the last month in trading activities. And your eyes should look at where all the candlesticks are. And right off the back, you can see that all the candlesticks are right here, which is good, which tells you that the market this last month wants to buy Chipotle at this 1421 level, which we're under. So that's good. I did the math in the last 5 years, and the standard deviation for Chipotle is 5%. And I took the 5% from the 1405, and I had a 50% premium. So we're looking at a 1367 level. We're going to trade below that just to kind of mitigate our risk that much more. Okay. So the next step is to do our trade. Okay. And I am here in Robinhood. And as you can see, I did sell put at the 1350 level, which is way below our risk premium. It's way below what the market is asking for right now. And at the same time, we're kind of bullish with this trade based on projections from analysts that this is going to go up to 1600 based on some of the COVID recoveries that we expect. And then I did a buy call for 1345 for 1347 and 50 cents, and I bought 10 contracts. Okay, this 88 cents is the difference between these two price ranges, 475 and 388. And you can see that for this trade I'm going to be paid $880, but I'm going to have a collateral of $2,500. Not bad. So what does that mean? That means that by the 22nd of January, if Chipotle stock do not fall below 1347, if Chipotle stock do not fall below 1347 by next Friday, I get $800 and I get my collateral back plus whatever profit that happens between now and then. In other words, if Chipotle goes up, I have 10 contracts, each of them 100 shares. So I have leverage to 1,000 shares. So whatever move Chipotle makes in the positive direction times 1,000 shares, I also get some of that profit to a certain extent. Okay. And if you want to know the certain extent, I taught you about the options trading calculator. You can look in my other video so you can calculate that those returns as well. So this is a really desirable trade. All right, the next one is Apple right here. And again, as you can see, Apple fell to 127. Okay. And for this month, you can see the market is looking at about 120 or 119 is what the market wants for this month. 3 months might be a little bit, oops, sorry. Okay. 3 months might be a little bit lower, but there's a risk premium that you're paying for. So again, the market, as you can see, your eyes point straight to this 119.60, 120 level that the market seems to want for Apple, even though Apple's at 127. Okay. That being said, we want to do our trade around this level just to kind of mitigate our risk of Apple going lower than our strike price before the end of our expiration. All right. All right, so here's Apple right here. And you can see I have done a sell put at the 121 level, like I said. And I have done a buy put at the $120 level. Okay. And I bought 30 contracts. And my minimum credit, if Apple doesn't fall below 120 in 2 weeks, is $750. If Apple keeps going up, then whatever I have 3,000 stocks, whatever that move is times the 3,000 stocks to a certain extent, I get that profit as well. So the idea for me anyway is I try to let my calls expire so I can get max credit. Some people like to take money off the top when they're high. You can do that as well, but that's almost like you can't really time the market like that. So even if you just get the minimum credit, which goes without saying you're probably going to get, you still made money. So you can't be greedy with these kind of things. But anyway, so that's all for this week. If you have any questions, please let me know. All right. Thank you so much, everybody. Have a great day.